Will infrastructure expenditure make the future brighter? The 2014 budget speech coverage is brought to you by Old Mutual Corporate.
Welcome to this special Budget Day breakfast broadcast. I am Godfrey Mutizwa. Now, to give some insight into what we've just heard from Finance Minister Pravin Gordhan, I'm joined by Angelique Ruzicka. She's editor of Justmoney Moneybags, and she is in our Cape Town studio. Michael Treherne, he's portfolio manager at Vestact, and Craig Aitchison, and he is general manager of customer solutions at Old Mutual Corporate. Gentlemen and lady, welcome and thank you for your time. Let me begin with your general impression. As I said at the top of the show, to me, what I saw was a boring budget, and I'm reading overall that this is a budget that is directed at an electorate that is going to be deciding the fate of the ruling party in the next few months. And at the same time, I'm also thinking this is a budget that is directed at the rating agencies and saying to them, hello, we are totally in control of our finances here. There's nothing wrong here. Yes, we're struggling growth-wise, but we're taking measures to ensure that we are not overrunning on expenditure, hence a smaller budget deficit than forecast, but also a smaller growth forecast. Let me begin with you, your general impressions of what he had to say, and whether I'm out of line.
No, not at all. Thanks for having me on the show. I think that we said earlier that the minister has got to walk a bit of a tightrope. He's got the rating agencies on one side, he's got an electorate on the other. And I think in many ways we have actually gotten a conservative, even predictable in parts budget that has walked that tightrope. But certainly on the savings and retirement side, a few positive surprises that have come through that we didn't expect. So for me, positives. Nice to see an increase in the tax-free lump sum for retiring from retirement funds or being retrenched, going up from 315,000 to 500. Tax on that was very low, but good to see the move up and a good positive intent. We've had confirmation of the tax incentivized savings vehicles coming through, so investments that you can invest in and not pay tax on those investment gains. I think that's very good to see that come through this year. Confirmation as well that NHI is going to proceed, we'll see more on that later, and a UIF extension, which maybe is speaking to the electorate, but certainly welcome to those who are unemployed. And one thing for me where I was thinking, would it be nice to do more? We've had the usual increases in the social assistance, you know, the social grants, but the increase is very low for the child and foster care grants. So more of the increase going to the normal state old age grant. That's okay, but very low increases there and very marginal increase on the tax credit for medical aid contributions.
You would have wanted to see more?
I think it would have been good to see at least inflation increases, and increases there were actually less than inflation.
Michael, so he walked the tightrope. How well did he walk it in your view?
Yeah, I think he did well. This is probably one of the toughest budget speeches that a South African finance minister has had to give. I was pleasantly surprised to see our budget deficit in at 4%, which is a bit lower than I was expecting, given the backdrop of very low GDP growth of only 2%, which was lower than their forecast last year.
And no tax increases?
No tax increases. That was a nice surprise. I don't think we expected a tax increase, but there was some chatter around a possible tax increase. I think
for the rich, that is.
Yeah, for the rich. So inequality at Davos was the big topic, and one of the ways that you are meant to combat inequalities through taxes. I think he resisted increasing taxes to aim at making government more efficient. So towards the end of his speech, he was talking about how they're cracking down on over expenditure and wasteful expenditure, which is nice to see.
So overall, you're happy with this budget from a market perspective?
Yes, I'm very happy. So on a national level, we're happy. I think now we need to see if at the municipal and provincial level that people can then execute it.
And we know that they underspent a lot in this particular budget, so we'll definitely be watching that. Let's go to Angelique in Cape Town. Angelique, you had the two gentlemen. They're speaking of tax reform has been done, and we generally have happiness from this side. Market-wise, we're looking at a lower budget deficit, so there's general happiness. From where you sit, is there anything else that they missed there that the minister got right? And your general impressions, please.
I think what the minister got right was including the retirement reforms that he was talking about in terms of making retirement compulsory for all workers, and he also was talking about savings incentives, introducing retail bonds, which would be available for stockfels as an option to invest into, the tax-preferred savings accounts. I'm really happy that they're going ahead in 2015. I was hoping to hear more about that, but I'm sure we'll hear about that in the months to come. I wish, though, that he had talked a little bit more about how government would tackle debt in our country. He was saying that there would be there would be a clampdown on reckless lending and debt collectors, unscrupulous debt collectors.
Yeah.
But he didn't say too much about that. So I was really hoping he'd say more about that. And that in the previous budget speech, he was talking about how he would talk with the banks and the Department of Justice about what they would do about the debt situation in South Africa. But we haven't heard much about what happened to those talks or what will progress, how they will progress further.
Yeah. As a journalist, were you not disappointed that he didn't come up with anything that sort of jumps at us, something that gives us something to write about, that big headline that says, this guy, we can compare him to the Japanese Prime Minister, Mr. Abe, who has come up with this Abe economics and jolted an economy that's been struggling for years in one rut. Whereas here in South Africa, we've got a situation where we are muddling along with growth that is not helping anybody except just keeping things as they are.
Yes, it is disappointing to not have a massive headline or something that you could really tackle and stick, put your teeth into.
Yeah.
That is disappointing. But I think he had such a tightrope to balance on. He's trying to make it an election-friendly budget speech, while at the same time he had the ratings agencies on his back watching what he was going to do. So I think he really was just trying to be conservative.
Yeah, I almost get the sense that maybe this budget should have been delivered after the elections and perhaps would have seen something that's stronger. Let me come back to you, Michael. Those general headline numbers, so growth we have seen, 1.9% we had in 2013. He is now forecasting that we're going to see 2.1%, 2.7% in 2014, 3.5% in 2016. Those appear moderate numbers, and with a budget like this, you almost get the sense that this is an opportunity lost, really.
Yeah, it's the 2.7% is down from what he was forecasting last year.
3%.
Yeah, last year it was 3% for the coming year. Now it's 2.7.
Yeah,
it's a tough.
And he's doing nothing to try and get it back to where it was.
I think he's doing the best he can. He's implemented small business tax relief, which is a great job stimulator, which also helps growth. He's in a very tricky position that we've got rising interest rates coming now, which doesn't help growth. So I think he did the best he could with what he had, and we'll have to see what happens going forward.
Yeah. You okay with what he had to give? I want to use the word bold. I'm seeing nothing that is bold in this budget that is required to get this economy moving again.
Yeah, I think what he did acknowledge was that 2.7% was too low.
Sure.
And that it should be 5%. So he was clear in saying that, and I think that's positive at least.
Yeah.
And then he did go on to talk about a number of what he called growth initiatives. So a number of initiatives under infrastructure to try and boost those, although a lot of them were programs in progress. So I think the real
and
issue
programs
there
we've had as well.
is delivery rather than more programs or even funding that's needed there. Interesting to see a greater focus on sort of special economic zones as another way, maybe something a little bit different to what we've focused on before.
Yeah, just to talk about those economic zones, because for me, we've got a rand that stays sitting around 11. So there's a big opportunity here to ramp up exports. And yet what you get is sort of like a muted response from government. There's nothing, again, I'm not looking for a headline here, guys. Don't get me wrong. I am saying the minister is not giving us anything that says, I realize where South Africa is, and I am coming up with initiatives that will address the situation we are in and actually use the situation we are in to make a difference.
Look, I think you got to remember too, and he did mention in his speech, that they're really wanting to have a long-term plan that is expressed in the NDP.
Yeah.
And so I found that also very interesting. Lots of reinforcing of the National Development Plan.
Yes,
Saying
true.
it's there.
Yeah.
You know, the new government that comes in, we're looking to you to deliver it.
Yeah.
But all the initiatives that he's announced are very much along the lines of strengthening the plan that is captured there.
Yeah. Angelique, I saw a bit of reference to trying to take advantage of the weak rand around talking up the Africa angle, where the minister was saying that they are going to try and to make sure that they increase trade with the rest of Africa. We know the rest of Africa is growing. 5%, 6%, 7% economies like Nigeria, Kenya, Ghana, etc. are growing at. Did you read anything in it that will perhaps attract the money that we're beginning to see go into those other entry points into Africa? For instance, people now speak of East Africa, where Kenya is the way to go into the continent, and Ghana perhaps is another way to go into the continent, and Nigeria as well.
Yes, I think the reference to Africa and looking at what else Africa could offer in terms of trade with South Africa and investment, I think is the right approach. I think he may want to piggyback off the growth successes in other African countries, which we are lagging behind in some respects. So I would imagine that's why he's looking to the greater Africa and embracing that. Beyond that, I didn't read too much into it.
Michael, no tax. Everybody's happy. Are you surprised, particularly given the tightrope that you had to walk between revenue and tax collection?
I'm not too surprised. I think our tax rate compared to the rest of the world is in line.
Yeah, but some people are saying our VAT rate is a little bit on the low side.
Yeah, if you increased VAT, it would increase the revenues that they collect greatly.
But hit the poor and the electorate.
Yeah, VAT, I think VAT contributes about 27% of their revenue. So if you increase VAT, obviously it's not only your top income earners that get hurt, it's everyone.
Yeah.
But then again, it's based on consumption. So if you increase VAT, you hopefully consume less, and then you save more through the programs that he's put in place to try and encourage saving.
Yeah. Yeah. Craig, I wanted to come to you on one issue that I saw, a swing between the contributions, the different contributions to the fiscus between individuals and corporates. Whereas before, I can't remember the exact numbers, but I'm looking at a contribution of individuals of around 34%, whereas before, I think it was around 19 or 20% thereabouts. That, of course, means the consumer can't say, but what's going on here? Are we taxing more by stealth without actually realizing it?
I think, look, if memory serves, that was probably in the portion of the speech where he was talking about, he quoted a comment from 1996 and about broadening the tax base. And I think he was trying to demonstrate that over the years, the SARS have done a very good job of that, which we certainly would agree with. So the taxpayer base has grown tremendously and their contributions, same with business. I wouldn't say there's anything in this budget speech that is going to dramatically change that balance at the moment.
Will infrastructure expenditure make the future brighter? The 2014 budget speech coverage is brought to you by Old Mutual Corporate.
Yeah, the face of the man of the moment, the man who has just presented a 1.3 trillion rand budget to South Africa, Finance Minister Pravin Gordhan, and we are discussing how he distributed the money. I still have Craig Aitchison from Old Mutual Corporate with me here in Johannesburg, and joining our discussion is Kyle Mandy. He is technical partner at PWC, and from Cape Town we'll be joined by Stephen Nathan. He's CEO of 10X Investments. Now remember, you can tweet us your comments at CNBC Africa #SA Budget 2014. It would be interesting to hear your comments. Let me begin with you, Kyle, because you're the new man, and you, of course, are the man who talks about what everybody else is scared about in a budget, which is taxes. From what we saw, I did hear the minister say no tax increases for all of you.
Well, that was good news, wasn't it?
Absolutely.
It's always good news not to have tax increases.
Did you pick up anything else that he said around tax and tax reform, and what else is going to hit our pockets?
No, look, I mean, I think the positive news is that that individuals are going to are seeing some tax relief coming through. I think they said about
9.3 billion.
9 billion rand, and in that respect. We'd have to run the numbers and see what that translates to in terms of relief from fiscal drag, if it's full relief or partial relief or even going beyond it.
Please explain fiscal drag for our listeners, because there are some people who will hear this big word coming through and they have no clue what it means.
Okay, fiscal drag in very simple terms is the a result of inflationary increases pushing you into a higher tax bracket. So in order to maintain the effective tax rate that you pay as an individual, you would need to get the inflation-related relief for taxes that relieve the inflation-related increases you get in your salaries and so on. So that's what we mean by fiscal drag.
You don't want to be bumped in a higher bracket where you pay more tax without actually getting money into your pocket.
Absolutely, in real terms, of course.
Right, yeah, okay. Any other points that you picked up?
The relief, I think, was mentioned earlier in relation to retirement reform. I think that is welcomed, particularly for those who are going to be retiring soon. No further relief in relation to retirement savings per se in terms of the contribution levels.
Right.
One of the concerns we have is around the monetary cap of 350,000 that has been put on that. We would like to have seen further relief in that regard, so there's nothing there at this point in time. And just generally, I think in terms of the other taxes, general fuel levies.
The sin taxes came in, beer 9 cents, that's an increase of 8%. Unfortified wines 17 cents, an increase of 6.2%. Fortified wine 7.5% increase. Spirits 12% increase. That's the biggest above inflation.
Look, the sin taxes. Every year you can expect to be nailed by that. The smokers and the drinkers, we joke about it every year. They get nailed every year, and that's just expected. So no surprises in that respect. The general fuel levy only going up by 12 cents a litre was a surprise, and the minister did allude to it. That was because of the recent petrol price increases.
They were listening to Gauteng.
Well, he didn't mention e-tolls. No, but he certainly did mention the recent increases in the fuel prices and so on. So, so I think that was welcome relief. I mean, while there will still be those complaining that it's gone up at all.
So tax-wise, from your perspective, this has been a good budget?
It has been a good budget. I think the tax revenue collection numbers surprised on the upside. We certainly didn't expect.
Do you understand that, though? Because the minister is giving us these numbers. Of course, we have no opportunity to look back and examine his numbers.
Oh, absolutely. I mean, look, the proof will be in the pudding when the final numbers are released, and those will only be released come the mini budget, so we'll see the actual results for the year. But from a credibility point of view, the Treasury has the credibility. Their numbers generally stack up. So we don't expect there to be any discrepancies in that regard.
Craig, you want to add anything to the tax?
Just talking about limits that we might have wanted to have seen increased. So Kyle mentioned the rand limit that will come into effect on contributions. Another rand limit that's in place is around that new tax incentivized savings vehicle that will come in hopefully this year. And Pravin Gordon there reinforcing that the limit that has been spoken about for probably the last 2 years now of 30,000 rand a year is going to be unchanged. And that's, again, another rand limit. And any rand limit, you must know, is always susceptible to inflation. So we were hoping to see some indexing of that already. But certainly if it's not going to be this year, we'd strongly suggest that it kicks in from next year, seeing that also grow with inflation. Otherwise, the actual benefit you're receiving will erode over time.
I come back to my budget, I come back to my comment about a budget that's tailored for elections. Stephen, now, I'm hoping you will bring us some fresh perspective here. So we've been talking about a boring budget, really no surprises. The minister with his eye on the elections and also watching the rating agencies and saying to them, guys, this house is in order. What did you make of his presentation?
Well, we look at it from a retirement fund investor perspective, and we can't see any major negatives. Yes, there's things we would like to have seen more of. But I think from a retirement fund investor perspective, and obviously that's a big savings pool in the country, so the rating agencies would want to see stability in the savings because savings fuels investment, and it's important to have a strong retirement savings pool where retirement savers have confidence in the system. So I think government has reinforced their commitment to improving retirement outcomes. Specifically, they've spoken about compulsory preservation and compulsory savings. Now, there's very little detail because, as you say, it's an election year. But if we can get that in place, that'll have a dramatic improvement in people's ability to retire with enough money. And also, they've touched on the high fees. Treasury's been very critical of retirement fund fees. And we look forward to the draft proposals because if investors pay lower fees, they capture more of that return. There's more savings in the system. There's less leakage. And that's better for the country as a whole and certainly better for retirement fund savers.
So from the perspective of someone who manages people's funds, market-wise, you're not seeing anything that's going to knock the market or something that perhaps the traders are trading on right now?
No, I can't see any negative news. It really is retirement fund friendly, it's investor friendly. As I said, we would have liked the minister to have gone further on certain things, certainly to fleshed out exactly how costs are going to be reduced and whether firms are going to be mandated to have lower charges. But certainly nothing negative that we can see.
Kyle, let me come to you. So tax-wise, we know this has been good. Now, there was that initiative to try to re-establish again South Africa as a base from which foreign investors looking at Africa can come and expand into the continent. Do you sense that the minister did enough in terms of putting the incentives in place that will help those companies looking at South Africa and saying, here's a stable environment, here's a very good legal framework, here's a good banking system that we can use to try to get into these high growth markets that we're seeing around the African continent?
Yeah, I think from a stability point of view, I think it's there. If we talk tax specifically, I'm not sure that he's gone far enough yet, and certainly it's part of the Davis Tax Committee's mandate to actually go and look at the tax system and look at tax levels in the tax mix in South Africa as well. We certainly hold the view that there's lots of work still to be done in that space, and there are lots of things that South Africa can do to make it more attractive from a foreign investment growth point of view. So he hasn't gone there yet, but hopefully that will be next year's budget.
Indeed, after the election. One criticism I've heard is that foreign investors are still burdened, if you like, when they come into South Africa with compliance in terms of local law. And when you look at what other countries are doing around the continent, they're simplifying those rules that pertain to foreign investors. For instance, one criticism is that you're still taxed in South Africa on what you earn in the rest of the continent. But within the constraints that the minister has, does he have the room to be able to flesh out those things and perhaps loosen the tax regime a little more in order to be able to give these guys a little more?
Well, certainly. South Africa has had in place for a number of years now, and they've tinkered with it just about every year, is this headquarter company regime. And we saw again allusions to, it was referred to as, I think, the headquarter company regime, but it was really what he was talking about was the new Treasury rules and so on for Treasury companies. And further reliefs in that regard. All of those things are welcomed, but they really are playing around the fringes with minor changes. I think something bold is required to really make South Africa attractive as a destination for investments and make into Africa and make South Africa the real gateway for investments into
especially
Africa.
To be able to tap into the growth in the continent that we have seen. At least there's someone who's using my word here, bold. Something bold is missing. So let's talk about what the minister could have done but didn't do in this particular budget.
Well, I think what's interesting is what he mentioned but didn't mention, if I can call it that way. So there are a few things here where he says more will come out. And the more that will come out, there's a few interesting insights. So Stephen mentioned preservation and mandatory savings for retirement. Those aren't new, absolutely on course for that. But those are going to be powerful levers to drive costs down in the industry. And so very nice, positive, long-term impacts there that he didn't maybe highlight but will come through. On the other side, though, if you look at NHI, he just said, well, some papers are going to come out. But the Treasury paper that has to come out on funding has to talk about how are we all going to pay for NHI. And that could be, looking at previous budgets speeches, an increase in VAT, it could be an additional special tax, and all those things. So there's lots of news still to come on some of these important longer term things.
You sound like you're not surprised that you didn't say anything much on NHI and how it's going to be funded.
Certainly not. I think what we expected was confirmation that the policy intent is still there. The difficult challenges and the politically difficult issues are going to have to be unpacked in these white papers that are going to come out.
Stephen, I saw, or maybe I missed something here, but I didn't see any mention of the cap on the amount South African investors are allowed to take outside into the continent. I thought that was an opportunity missed. And then also, I saw there was no mention on any foreign exchange control look in, if you like, at all.
Yes, I think that, as you say, over the last few years, government has significantly relaxed exchange controls and made it much easier for certainly individuals and to a less extent companies to externalize funds with limited ex-con regulation. And I agree with you, I haven't seen anything that addresses those or changes those limits. I think it is quite generous, and maybe in terms of making concessions, there was probably other areas that could have done with their attention as well, rather than ex-con, which a lot of progress has been made over the last few years.
Yeah. So